Now, the second part of FATCA is the requirement that foreign financial institutions report U.S. accounts. Well, why do they do that? Well, FATCA imposes a 30% tax on all U.S. transactions of foreign financial institutions that do not agree to share U.S. account information. Essentially because most foreign financial institutions, in fact, have substantial assets invested in the United States, that effectively means that they're going to cooperate. In fact, there are now 145,000 financial institutions around the world who are signed up for the program. The United States has developed two model bilateral agreements. They're called IGAs, Intergovernmental Agreements. Model 1, the foreign financial institutions report accounts to their own governments, which pass account information on to the Internal Revenue Service. Model 2 is a foreign financial report accounts directly to the IRS. The United States is negotiating FATCA intergovernmental agreements, and according to PricewaterhouseCoopers, as of the end of last year, there were IGAs in force or treated as in force with 115 countries. And as I said to you earlier, over 145,000 foreign financial institutions are registered for the program. The United States and Greece have entered into a Model 1 IGA, which is treated in force as from the 30th of November 2014. Now, how is a foreign financial institution going to know who is a U.S. person? Well, first of all, they're required to conduct some due diligence, which is not terribly carefully defined, but will generally gather and retain enough data about account holders to determine if the account holder is a U.S. person. Now, most of you are being asked to complete and return a Form W-9 or a W-8 and I'll get into those forms in just a second. But typically, the bank is going to look at U.S. birthplace, automatically a U.S. citizen. Driver's licenses, passports, addresses, employer. I mean, they're going to look for some indicators, and those will be their indication that you are a U.S. person, and therefore they're going to ask for one of those forms. Well, I want to talk about two forms, the W-9 and the W-8 Ben. W-8 Ben. U.S. citizens may not complete and deliver a W-8 Ben. Whatever your bank tells you, the only form you're allowed to sign is a W-9. That is exclusively for U.S. citizens. And it says right on the W-8 Ben, if you're a U.S. citizen, do not sign this form. Yeah, well, but you now understand W-9. Yeah. Do not go to your bank, go to the IRS website, do not go and download a W-9, fill it all out, and then go and give it to all your banks. Don't do that. You have no obligation to do that unless they ask for it. So if the bank comes and asks you for a W-9, you're required to give it to them. But don't paper the town with your W-9. Why not? Because it has your U.S. Social Security number on it. Right? Your U.S. Social Security number will be on that W-9. And you want to make sure that that is handed individually to the bank at the branch that requested it. And my recommendation is you write the name of the bank and the branch that requested the form in the section on the W-9 that says requester or requested by. And you keep a copy. So now you know everybody who has a copy of your W-9 and to whom it's been given. The Internal Revenue Service will never communicate with you directly by email or fax. So if you've received a W-8 Ben by the internet, by email, or you receive a W-9 by email from somebody reporting to be the IRS, it is a hoax. It is a classic internet phishing expedition. Because if you look at the W-9 form on the IRS website, you will see that there is no detailed information about your bank accounts, because that information is always optional. And I recommend strongly that when the bank asks you for a W-9 and you give it to the bank and it says account numbers, I always say known to the bank. Why on earth are they asking me what my account number is? They know what my account number is, and so I don't need to write it down. Do not ever fill out any forms sent to you purportedly by the IRS through the internet, by email or fax. They are all hoaxes and designed to get confidential information from you to enable the crooks to either take over your bank accounts or otherwise compromise your financial information. All right. This FATCA agreement, this IGA that the United States has entered into with Greece, is essentially modeled on the same thing as with Mexico. So because I had the Mexican slide already done before Greece entered into the Model 1 IGA, I decided just to leave it up there. All right. And you can substitute in your mind Greece for Mexico if you wish. Under the Mexican IGA, the Mexican government will annually provide to the IRS the name, address, U.S. Social Security number or tax identification number of each U.S. person who is an account holder. The same information will be provided for entities controlled by U.S. persons. It will provide account numbers, the name and identification of the FFIs, meaning the foreign financial institution, where the accounts are held, the average monthly balance and value during the year, the gross amount of interest paid on depository accounts, and the gross amounts credited or paid to non-depository accounts, including redemptions. Yeah, oh, good. Hit the wrong button. What are the key implementation dates? Well, tax returns for 2011, as I've already said, should have included a Form 8938. As of July 1 last year, these deadlines were pushed back a little bit. I think the July 1st deadline was really moved to January 1, 2015, which is why you're getting the letters now. But for most people who are opening new accounts, so if you went to the bank and you wanted to open a new account, you would have been put through this FATCA due diligence process of determining whether you are a U.S. person, and you've been asked to file a W-8 or a W-9 in respect of the opening of that new bank account. The first FATCA reports were due on March 31st, 2015, and again, I believe that date has been moved back a little bit. At the end of last year, FFIs were supposed to report owners of pre-existing high-value accounts of $1 million or more. Again, I don't know if that date has been moved back or not. By the end of this year, foreign financial institutions must review all pre-existing accounts with balances above $50,000 to determine if any are U.S. accounts. And again, that may be pushed back 6 months to June of 2016.